Your mortgage payment. How is that calculated? Okay, write this down. It is PITI. PITI, that's what we call it. PITI stands for principal, interest, taxes, and insurance. Now, I actually start at the bottom and work my way back up. In Baltimore County and Baltimore City, the property tax rates are a set amount, meaning they are a percentage of the assessed value of a particular property. So, in Baltimore City, that tax rate is 2.4%. In Baltimore County, it's about 1.1%. Surrounding counties, Carroll, Harford, Anne Arundel, are all also around the 1% rate. Now, I said of assessed value. Assessed value is just about market value or a little bit under. And the reason why I'm spending so much time talking about this is because if you are out on the other real estate portals and you find a house that you're like, wow, that looks amazing, and the property taxes seem unnaturally low compared to the other homes that you've been looking at, it's important to understand that that homeowner might have some other kind of credit where you, as the home buyer, the new homeowner, wouldn't qualify for that credit. So it's important for you to calculate your own taxes. So let's do a little simple math. If you're looking for a home in Baltimore County, say at the $500,000 range, the property tax rate is 1.1%, which means it's going to land in about the $5,500 to $6,000 for your taxes per year, which means that the T part of PITI is going to be about $600 per month, right? Then your property insurance, so long as you don't have anything like a swimming pool or some other additional hazard, property insurance is about $1,000 to $1,500 per year. So that's about $120 a month. So we are now at $600 plus $120. Part of your mortgage payment is $720, and that just goes to taxes and insurance. So how does the bank figure out the P&I part? The P&I part is how you pay back the loan that you borrowed. So Google something. Amortization chart, AMORTIZATION chart. What that is exactly whatever current interest rates are. It is a chart. You look over 30-year fixed, today's interest rate, it gives you something called a factor. And what that means is that is how many dollars per $1,000 you've borrowed. So today is February 11th, 2021, and the current rough interest rates are about 2.65%, in which case that amortization factor is $4.01 per $1,000 you've borrowed, which means if you borrow $100,000, 100 times $4.01, your principal and interest portion is going to be $401. That's how that works. So now you have the recipe on how to calculate your very own mortgage payment. Now, some mortgage lenders might be like, oh my God, that's not exactly how it works. Correct, because it also depends on how much you put down, and if you put less than 20% down, you're gonna have to add in private mortgage insurance. But this is a nice rough way of calculating it. Now, beware. If you are searching on the on the real estate portals and it gives you an estimated mortgage payment, that is only the P&I part of the payment. So that may look very affordable, but you have to remember to add in the taxes and insurance. In Maryland, that is a requirement to be a part of the mortgage payment. That's how you calculate mortgage payment.